Hi traders, welcome back to the channel with me, Fawad Razaqzada, StoneX market analyst. The Nasdaq fell around 2% shortly after the open and at the time of this recording, but the recent trend for the tech-heavy index and indeed other major global indices have been quite bullish. After Nvidia's latest earnings report failed to keep the markets under print, the real question now is simple. Will the bulls step in to buy this latest dip, or are we setting up for a more significant drop? Let's break it down. One of the main factors the bulls were hoping to trigger the next upsurge in stocks this week was clearly Nvidia's earnings report. The company delivered strong numbers last night. Revenues beat expectations as AI demand remained firm. And that helped to further calm some of the recent anxiety around tech valuations. The Nvidia stock and index futures reacted positively initially before pulling back, and that led to a sharply lower open on Wall Street today. But Europe certainly welcomed the news where more records were reached for some of the major indices like the FTSE 100, for example. So while global risk appetite has remained strong, it hasn't been a euphoric surge across the board. Yes, Nvidia impressed with its results, but markets had already priced in a lot of the optimism. Investors are still asking questions about sustainability. How long can AI infrastructure spending grow at this pace? What happens as competition intensifies? And not every tech company is benefiting equally. Salesforce, for example, offered the more cautious guidance and its shares dropped. That's a reminder that this is a selective AI rally and not a blanket move higher for the entire tech sector. Now, let's talk about the bigger picture. The broader tone remains risk-on outside of the Nasdaq, as has been the case since markets bounced back on Tuesday. That came after some of the recent AI disruption nerves were soothed by Anthropic revealing a number of new partnerships. The Nasdaq 100 itself also rebounded nicely on Tuesday and gained further ground on Wednesday as momentum improved and volatility eased. That was until it fell back after the open today. But even strong trends don't just go up in a straight line. They pause, they build structure, and then resume higher. And that's exactly what might be happening here with the Nasdaq. So let's look at the key levels. Technically, we've had a clean upside break after several days of tight consolidation. The close near the highs looked like a bullish signal until the reversal happened today. Now the focus shifts to support and whether we will see the market bounce back as we head deeper into the US session today. The key level to watch is around 25,000, which has been taken out today. But can we see a recovery and a close back above this level? That's a key question. However, a potential close below 25,000 psychological line would start to weaken the bullish case. There is a short-term trend line to watch as well below here, and the next key support comes in at around 24,650. On the upside, the next resistance zone sits near 25,400, where the index sold off from today. And above that, we have 26,000, which could be the next upside target should momentum build. Above that, there's very little standing in the way until the previous all-time high near 26,400. So what's the base case for me? Well, given the recent strong trend for stocks globally, and as long as earnings momentum hold, particularly from leaders like Nvidia, the path of least resistance remains higher despite today's drop. We may have seen more than just a modest pullback today, but in volatile markets, even moves of 2% is not too abnormal. That's your Nasdaq update. If you found this breakdown useful, make sure to like the video and subscribe to the channel. Thanks for watching and see you in the next one. Take care.